What's going on, traders? Welcome to another video. This one is going to be the part 2 of the 4-hour profiling. This video is actually a follow-up or a second part of my previous video. In this one, we will go deeper about the 4-hour profiling, and we will also study the background and build a logic or foundation behind it. And big thanks to T-Traders and Garrett for some of their insights. Let's get started with the phase up price delivery. The phase up price delivery is actually an underrated topic because the market actually operates on this. If you think about the candle structure, we have a wick in a candle, which is the reversal pace, body in a candle, which is that expansion pace. The price expand after forming that wick, and our goal is to let the wick form and trade the expansion. Now, the wick is the reversal pace. From the opening price, the price went lower to create this wick, and now it is reversing back. When the price is crossing the opening price of a candle, it is also changing the state of delivery and creating that wick. Now, using the feather price delivery, we have a reversal established, and now we will trade the continuation or the body of the candle. Now, the daily profile and the 4-hour profile relation. In a daily range, we are basically trading away from high or low of the day, which is that wick, and we are trading towards the failure swings. Now, the idea is that a day has 6 4-hour candles. If a reversal happens within the early candles like 18, 22, and 2 a.m., it is called overnight or London reversal. If the reversal is occurring within the New York AM session, within the 6 a.m. or 10 a.m. candle, that is the New York reversal. High resistance liquidity run and low resistance liquidity run. The market is always trading from high resistance liquidity run towards the low resistance liquidity run. Here you can see the schematics of that candle. We have opening price, then trading lower, closing above that V-shaped recovery reversal, 18, 22, 2M, and now the New York session candles are expanding higher. The market is trading from high resistance liquidity run towards low resistance liquidity run. The high resistance liquidity run means manipulation. The price is manipulating sell stops and then trading towards the failure swings. There is a resting liquidity above here. Now, protected swings and failure swings. The protected swings are the opposing candles which are tapping into a key level or reaching a point of interest. Once these are formed, these aren't revisited. These are views as a high resistance liquidity run, and we would trade away from that. Here is the schematic. We have down close candles into a key level, a sell side liquidity pool. We close above this. Now the price doesn't need to go to this low again because it is protected swing. We retrace into a fair value gap. Now then again close above the down close candles. Now this area is a protected swing because the price has fulfilled its duty, tapped into a level. Now the price will expand away from that. Now we have again tapped into that order block. Now close above here. Now this low is a protected swing. Now the daily profiles, London reversal when the daily candle print its wick within the London session, then the New York expansion. The New York reversal when the daily candle print its wick in the New York session. Usually when the Asia and London are consolidating, then the New York reverses that trend and expand in certain direction. The MMXM's next day model are the T-Trace fractal model. It is built on the logic that the market cannot reverse without a swing point. So following the second candle of the swing point, the third and fourth candle will expand until some drawn liquidity is met. Here in the schematic, you can see we had a second candle of the swing point, the reversal, high resistance liquidity run. Now the price is expanding away from that. With the candle third expansion, now the candle 4 should respect the 50% of the previous candle to get expanded higher. For the fifth candle, it should respect the 50% of the previous candle to be an open low high close or bullish expansion candle, but that'll work until some draw on liquidity is met. Now let's talk about the first type of entries within the 4-hour profiling, which are the 4-hour 2 and 15 positional entries. When the 18 or 22 candle, which are the 4-hour candles, reverse, that is overnight session. Usually it happens when we reach a key level later on the day. From the opening price, we reached a key level. Now we are reversing, creating the wick of the daily candle and the wick of the 4-hour candle. This is the 22 candle. It is reversing, closing above the opening price and the consecutive series of down close candles, a change in the state of delivery. Now we can expect the 2M, the 6M candle to expand away from that. In this schematic, you can see we have a 2M candle tapping into a fair value gap and then expanding away from this point. Now the 2M reversal, which is also called the London reversal, it happens when the Asia consolidate or do that protraction pace. Protraction mean creating the wick of the daily candle, the phase in which the candle is creating the wick. London prints the wick, New York expands. How to engage? You have to wait for the M15 reversal and then enter the next continuation candle, which I will be going over in the examples. So here is the London reversal. We have Asia consolidation and also kind of protracting down. Then we are closing above the consecutive series of down close candles, the 2M open, then high, creating that wick right here on the right side, you can see. And then the 6M candle expanding away from this reversal, London reversal, New York continuation. Now we will go over some examples of the London and overnight reversal, and after that we will go over the New York session. Starting with our first example here on Monday, this is the current week's price action. We open below the Friday's low, our previous week low, on the Monday candle. We were kind of consolidating. We took the Friday's low, opened below it. Now we can expect two things, either continuation lower or reversal higher, since we are closing below the previous week's low. So we can assess that on the lower time frame. So dropping down to the 4 hour. Here on the 4 hour chart, you can see we are closing inside the range of this candle. So we cannot trade the 18 candle. Either we would wait for the London or the New York session. So skipping it to the 22 candle. We expanded higher, same within the 2M candle. Now this is confirming the narrative. If we drop down to the 15-minute chart, because the time frame alignment for the 4 hour is the 15-minute. Here on the 15-minute chart, you can see despite being the candle closure, we are reversing higher. If we go to the 1 hour chart, these are the consecutive series of down close candle, which are we closing above, which is confirming that reversal. Dropping down back to the 15-minute chart, you can see the Asian session expanded higher. We have 18 low of the day. Then the London is also expanding higher and creating that feather swings. These are feather swings. Now waiting for the New York session to get the reversal and get inside with the distribution again. Now on this day, on Monday, we didn't had any news, so I wait for the 9:30 open, usually on no news days, to confirm that reversal or the narrative. Now here is the tricky part. We took the London session low right there, but this wasn't a key time. It was 7:45, and usually I wait for the drivers to confirm the true order block or the true narrative. So we had this change instead of delivery, but this was the fake one. Now on 9:30, within the 6 a.m. candle, we are usually making that reversal within the 9:30 candle. We took that low once again, and now here on the ES is a stronger pair because we have created SMT divergence right there. The ES closed above the down close candle after the 9:30 manipulation on the NQ and creating that SMT divergence, which is confirming the wick of the 6 a.m. candle and a true reversal. Now I can enter within the next candle and put my stop loss below the 50% of the wick. I'm using the 50% of the wick because this wick is an order block on the 5-minute time frame. If I drop down to the 5-minute, this is an order block, a whole series of candles, and targeting strictly 2R. And with that, we can assume the 10M expansion higher because here on the 4-hour candle, you can see we are expanding from the daily and we tapping into this fair value gap. So now we can expect the 10M to expand higher. So we reached our proper target, but on this day, we had some weird kind of retracement lower. You can see it. We had a manipulation of the 6M candle once again, and we expanded again higher, but I'm not trading past the 11M, so I didn't participate in this trade. Now for the second example of the London reversal, starting with the daily chart, we retrace into this fair value gap. So the price expanded, retraced. We had a candle 2 closure, candle 3 expansion, respecting the 50% of the wick. And now for the candle 4th expansion, it should respect the 50% of the previous candle's range. So this is our invalidation point, dropping down to the 4-hour chart. Now on the 4-hour chart, you can see this is our 50% of the previous day, and the daily candle is protracting away from the 18. It is creating that wick, so we could expect a London reversal or a New York reversal, dropping down to the 15-minute chart to see the price action more clearly. So here on the 15-minute chart, this is the daily open, and we have a failure swing above the open because we haven't created it from protected swing, and we have this failure swing, this failure swing. On the protraction pace, the daily candle is also printing that failure swings to then get them later on. Now going into the London session, we have bunch of failure swings, equal lows on the ES, and this failure swing on the NQ. So if we are reversing, we need to tag them and then get that reversal signature. Now in the 3am candle, we have taken that low. Now we need a closure above the consecutive series of down close candle. In this case, we have one candle, so we need a closure above that to make sure that the wick up this candle and the daily candle is printed and that get on side with the distribution. Now once again, we have manipulated this low. Now we need a closure above these consecutive series of candles to make sure the change in the state of delivery. Now we have closed above this candle, which is confirming the change in the state of delivery of this 2M candle and also confirming the wick up the daily candle. So now I can enter with the next candle. My stop loss below the body lows are 50% of the wick, targeting the current day high or the previous day high. This 6am candle right here, it opens up, created a small wick, and now it is also expanding higher. And also we can get a second entry within the drivers. Now we need a closure above this down close candle to make sure the continuation order block. Now within this candle, which is the 9am, we close above the down close candle. If you are sensitive about the 9:30 open, then you can trade after the 9:30. But in this case, I'm entering within the next candle. My stop loss below the body lows and targeting just 2 hour because daily range has already expanded too much. And we have expanded higher, and the 9:30 did retrace deep into the range, but we had our stop loss at the bodies and we expanded higher. 10M candle also expanded away from this. Now here for the third example, this is the prior to the second example. We are respecting the 50% of this wick and we are expecting a classic expansion or open low high close candle. So dropping down to the forward chart, this example will be focusing the New York continuation off of the London reversal. So here you can see the 2M candle is reversing after taking the 22 low. So now dropping down to the 15-minute chart to see things clearly. So on the 15-minute chart, you can see from the daily open, we are creating failure swings. The Asian session was failure swings all over, and we have the previous day high as our target. And since we don't have any relevant level to trade away from, so we can like use the internal manipulation levels. This low was created within the run session, and now we have manipulated that. But we need a closure above the consecutive series or a single candle to make sure the change in the state of delivery. Now we didn't get any entry within the 2M candles. We are waiting for the New York continuation. Now the 6M candle opens up, then it closed above the previous series of down close candles, confirming this is a change in the state of delivery. Now we can seek the New York continuation entries. Either we wait for the 8:30 news or the 9:30 equity open. Now going into the 8:30, you can see the driver is confirming that narrative. It is closing above the down close candles and to this fair value gap, which is that continuation order block. But since the 9:30 is ahead and this is like a consolidation for me, so in this type of scenario, I can put my stop loss like give it a discretionary boost. I'm putting my stop loss right here at this previous level, and since I have a large target to deal with, I can target that, which is about 2 hour. Now on the 9:30, we had that consecutive series of candles and we expanded higher, completing our target. Now the New York reversal, the 6am reversal, this happens when the early sessions of the day are protracting or consolidating. The New York makes that reversal. You can pair the drivers with that reversal because the 6am doesn't have that much significance. It is significant because of the drivers like the 8:30 or the indices open 9:30. So the price actually reverses on these specific times with the volatility. Here is the example. We have a consolidation early in the day. The 6am opens up. Then 7, 8am. We have a news on 8am. So it reverses. Now we have a narrative that the news manipulate. And now we should expand away from that manipulation. Now you can see the 9am and the 10am candle are expanding higher. Now the 10am reversal, which is late New York reversal at the 6am is failing to reverse, or it is in that protection path of daily candle. At the news or generally at 10am, we are reversing the daily range, which becomes the last point for the reversal. Here you can see we have a consolidation hold there. This is the news 8am. It didn't reach a key level, but still protracting down. The daily candle is still in the creation phase of the wick. Now the price protracted down on the 10am. We reached a key level. and now we are reversing. Because the 10 a.m. should be having a small wick, it is the last time for the daily reversal. If it is having a large wick, then there should be a reversal or consolidation day. Now at 10 a.m. we reached a key level. We closed above the consecutive serial of down close candles, which is confirming the wick up the daily candle and also confirming the wick up the 4-hour candle. Now from this point onwards, we can take the continuation entries to the upside. Now we will go over some examples of the New York reversal, which are within the 10 a.m. and 6 a.m. candle, and then we will go over the scalping entries. Now for the New York reversal examples, we are starting with the Forex. Here we are on the Euro USD and the GBP USD 4-hour chart. The previous day was a pretty much reversal day, and now we are continuing off of that. The daily time frame isn't giving that much of confirmation, so we will use the daily profiles and the 4-hour profiles confirmation to get on side with the distribution. So from the 18 open, we are kind of consolidating, and the GBP is trending lower. Now dropping down to the 15-minute chart to give us a clear insight. So here on the 15-minute chart, you can see from the daily open Asian consolidation, then we had a London reversal, but it failed to do so. It's still consolidating, not closing below the lows. And what do we have? We have fairer swings, the Asian low, the London low to target. Now we have 8:30 news, so we would wait for the news release to give us that narrative. Now with the 8:30 news, you can see we didn't had any level to reverse up, so we use internal level, which is the London's high. We took the London high, and now with news on our side, we have a manipulation and then instant reversal back, creating that wick, a change in the state of delivery, and confirming the reversal within this 5 a.m. candle. On the Forex, we have the 5 a.m., the 1 a.m., the 17, the 9 a.m. So we have a candle open at the 5, created its wick with the news, and now closing below it. Now this confirms the change in state of delivery, and now we can get inside with the distribution lower, and we have SMT divergence, which is important for reversal. The GBP isn't taking the daily high with the news, and the euro is taking that high. So this is the SMT divergence, the divergence between the euro and the GBP, which is also trigger for the reversal. Since we haven't closed below it, we can use the 5-minute time frame to confirm that. Like we have a consecutive series of candles, and now we are getting close below it. We can enter on the 5-minute or wait for the retest on the 15-minute chart. So we would wait for the retest, stop loss above the 50%, and targeting the Asian lows or the previous day's Asian lows. Now we have tagged M, and then expansion started lower. And we had also another continuation order block, consecutive series of up close candles into the previous order block, and now closing below it. Starting with the New York reversal example of the 10 a.m., we are on the current price section, Wednesday, 25th of June. So we are near the all-time highs, and yes, we could either take the continuation higher or trade a reversal from the internal levels towards the daily range back. So we can confirm our narrative with the drivers, the daily profiles, the polar profiling, and things like that. Since going into the day, we have going into the New Year session, we have taken the previous day high, which is a key level to reverse up because we are in a continuous expansion, a large range days. We're dropping down to the 4-hour. Now going into the 4-hour chart on the 6 a.m. candle, we have engaged this high. Either we get a continuation signature to get inside with the distribution towards the all-time highs, or we get a reversal signature back into the range, expecting the 10 a.m. candle to cap the daily range. So for that, we would drop down to the 15-minute chart to see things clearly. Now here on the 15-minute chart, you can see we hit consolidation all day, which is not a continuation signature or expansion signature. So the daily low becomes our drawn liquidity. This is kind of a range high and a range low. Asian consolidation, 2M and London session consolidation. Then we had expansion, taking the range highs. And now we need either a continuation signature or a reversal back into the range. So letting the 9:30 play and waiting for the 10 a.m. open. Now here on the 10 a.m. you can see after reaching that high, we should have left it higher and expanded. But what we do instead, uh, after manipulating the previous day high and internal manipulation, we are trading back into the range, which is also aligned with the 9:30, reaching a high, and then 10 a.m. reversal back. So now I can enter with the next candle, but since we have a small target to deal with, so I can wait for the continuation entry or the retest of this order block. So retest of this order block, stop loss above the high, and targeting this right here. And since we have 10M news, so we can expect some sort of retracement or large wick to get our entry filled. Now at the 10 a.m., we retrace higher to create the high up the 10 a.m. candle, and we are expanding lower. This is also a continuation order block. You can get inside with this too. And we finally reach the current day low. This is kind of a hard entry to deal with because we have like session consolidating, and then we have large wicks around the 9:30. But if you focus on the narrative and open up the candles, we had the 9:30. It created its wick, but the 10M candle didn't expand away from it. Because the 10M was a driver, it confirms the narrative back into the range. Now this is another example of the New York reversal. So we reached the daily high, the previous day high on the NQ on Friday, and we haven't reached it on the ES. So this creates SMT divergence. This is the New York session, and we can confirm it with the drivers, the daily profile, the 4-hour price, etc. So dropping down to the 4-hour. So from the daily open, we are trending higher. We reached a key level. The NQ engaged this level, and the ES created that SMT divergence, and it is reversing back into the range. So dropping down to 15-minute time frame to see things clearly. Now this is on the 15-minute chart. The 9:30 reached into a key level, engaged that, and the ES created the SMT divergence. Within the next candle, we are reversing lower. So on the 15-minute chart, we have a larger series to deal with. So in these cases, I can use the 5-minute time frame because we don't have that opposing candles. Drop down to the 5-minute chart. After the 9:30 reaching into a key level and the 10 a.m. capping back the range, we have closed below the consecutive series of up close candles, which is the change in the state of delivery. And we still have the 10 a.m. open left. It will confirm our narrative even more. So waiting for that continuation order block. Now we have the 10 a.m. candle open. Now in order for the 10 a.m. candle to be an open high low close candle, we need opposing run and then closure below it. Now we have series of candles followed by closure above, but this isn't reaching into a key level or having some top hunt. So I would wait for another continuation up close candle reaching into this fair value gap followed by a closure below. Now I can trust this is an order block. I cannot trust this because sometimes it is just a consolidation, so we need a closure below it, and we get that. Now I can enter on the next candle, my stop loss above the high, and targeting the London lows are 2R because daily range has already expanded much higher, and after taking a large time in the PM session, we get that continuation, and our profit target is reached right here. So this was the example of the 10 a.m. Reversal when the 9:30 is reaching into a key level. Now let's talk about the scalping entries, which is the 4-hour to 1-hour to 5-minute. Using the 4-hour candles as a confluence, trading the 1-hour to 5-minute swing points are the market maker models. How to engage? So this is the core logic. Inside the 4-hour candle, you have to find the swing point, which is established within that hour, and then trade the continuation. This is the first case when we have a consolidation, 6 a.m. open, 7 a.m. we hit 8 a.m. reversal, a swing point formation on the hourly chart, and now we are trading the 9 a.m. is a continuation higher. So this is trading within the current 4-hour candle. Now in this second case, if no swing point exists from the previous candle, then we wait for the new 4-hour candle to create that swing and then continue. So this is the second case. Now if the daily candle is still in that protraction phase, then wait for the new 4-hour candle to reverse and expand. The 4-hour candle have a lot of significance. If we are in protraction phase of the daily candle, the reversals are occurring within the 4-hour candles. If you talk about the Euro USD and the Euro pairs, the news are within the 3M, 2M, or 1M window, so we can reverse within that. Or if we talk about the New York reversal, the news or the volatility drivers lies within the 9:30, the 8:30, so we can reverse from there. Or the 10M itself is a reversal point for the daily range. So even the daily range is in that protraction phase, you can use for the new 4-hour candle to give you that reversal and then trade the continuation. So this is the core logic and idea behind it. Now we will go over some examples to make this even more clear. Now starting with the swing point example for the 1 hour chart to the 5 minute. So from the daily open, we are expanding higher. We want to see two things, either a reversal closure below the consecutive series of candles to then go to the daily open, or a continuation. For the continuation, the only level we see is this low right here. So we either reverse from this and then expand higher or reverse the whole daily range. The 930 is in that protraction phase. Now at the 10 a.m. open, we have SMT's divergence with the NQ. Now this confirms the narrative that 930 manipulation and 10 a.m. reversal back. Now we have the candle 2 of the swing point, so dropping down to the 5-minute chart. Now the NQ is very messy, and this was the entry where I was also stopped out for. I was entered here, my stop loss was below the 50% of the wick, and my target was the current day high. But this wick on the 10 a.m. manipulated me from the trade. So now waiting for the continuation order block. Now we have a down close candle and to a previous down close candle, which is a propulsion block. So I'm entering in the next candle. My stop loss below the wick and targeting 2R. And the price expanded and completed our 2R target. Now going over the Friday's example once more. We have taken this high on the Friday, and on the ES we are creating SMT divergence. The ES is a lagging asset and NQ is stronger. It is taking that high. Now using the 4-hour candles, if I pull up the 4-hour candle on the right side, we are expanding away from the 18 to create the high of the day. Now the 6M is reversing, but we already have that candle 2 of a swing point within the 6M candle. The 930 reversal creating the second candle of the swing point, aligning with the driver. So we can like trade the 10M as a continuation or the candle 3 of the swing point towards the London lows or the daily lows. So dropping down to the 5-minute chart. Now on the 5-minute chart, you have two choices since the 930 is involved within the reversal, which is confirming the narrative. You can enter within the reversal candle, put your stop loss above the high and target the one lows. So this is one kind of entry. Or you could wait for the continuation order block, which on this day, unfortunately, we don't get, or get a messy one. So now entering the 10M, the 10M continued lower, but we don't have a Willard order block. This candle isn't reaching into a key level, so I didn't use that. And since now we have that order block, this can be your continuation entry. We reached the London lows, our first target, but this entry took a large time and we reached that in the PM session. So this is how you can use the 4-hour candle as an expansion tool. Like we were expecting the 10M to expand lower, but we had a reversal established within the 6M candle. The second candle of the swing point was established within the 6, and we traded the 10M as a continuation lower. When the drivers aren't confirming any narrative and the 4-hour candle itself gives you an entry, so we had a large protraction away from the daily open. So this means a large wick. If I pull up the daily candle, it has created a large wick. So on these days, we can expect a smaller range, either to equilibrium of the range or aim for 2-hour targets. We were like expanding higher, a reversal signature, change in the state of delivery. So we can expect a newer continuation, but we would aim for less RR. There we have the 9M candle, which expanded higher, but the 10M itself took the 9M low and created the second candle of the swing point. Now we can trade the 11M as a continuation or the candle third. So dropping down to the 5-minute chart. So here on the 5-minute chart, do have the change in the state of delivery on the ES, and it is having a clear price action. So we will use that. Waiting for that continuation order block. Since we are expanding away from the open of the new candle, we can use the 3-minute chart for to see the order block forming early. And there we have it. Now entering on the next candle, my stop loss below the order block low and targeting 2R. And we reached that 2R target. Honestly, I will not trust these type of order block because don't have anything. I cannot trust this as a low. So I would wait for a deeper, a bulkier order block to get on side with. This is it for this video. Thank you guys for watching. Make sure to subscribe to the channel and like the video. And if you want, I can create you a model or a model video on the one-shot one kill entries from the 4 hour to 15 minutes. Until then, see you in the next one.